Hello, welcome back, YouTube. Um, Today I'll be giving a bit of a market update on the crypto space and um, basically a little bit of a trader's perspective on where we are and how to trade it. Um, so I think on the last video I said the 13th of September was the cycle low. Now, I think I was wrong, or I was wrong in that basically idea or whatever. Um, I think the new low is actually the 21st of September, so that came about on day 63. A pretty good reference to the 60-day cycle. It doesn't have to be spot on. It is what it is. So while I was wrong, as cycle traders, I like to think of us as basically a trend trader or maybe a swing trader. We try and capture the low and get out on the high, right? So in this, we just use last cycle as an example. We tried to get it around here, going down on, we were a little bit oversold on the RSI 5, and we continued to make higher lows into here. So we use the 20-day moving average as a bit of an indicator to say that we're which way the trend is going. It's just a little bit of extra. I think sometimes I myself get a little bit caught up with the different indicators and basically theories and stuff like that. I think it's important to keep it simple, but the 20-day is pretty useful. Basically, indicates what part of the trend we're in. So we're in the bull phase or we're in the bear phase. So the uptrend or the downtrend. So we made lower lows all through here. We didn't really break it. We tested it a couple of times. We were sort of testing it here, unsure, and then we made a little bit of a parabolic move up to the upside. You see just on that sort of trend, it broke that trend, and that sort of gave us the indication that it was basically the bull phase or the uptrend was over. Now we made a pretty substantial capitulation to the downside, broke the 20-day moving average. The 20 days, the 10 days is often a pretty good indicator as well, just to give us that little bit of extra confirmation. And really the crossing signifies that, it is over and we're in a downtrend. As you can see here, the 10 days coming up on the 20-day moving average, and that is again another great indicator to show we're back in bull mode. So as you can see here that I thought it was this day. We weren't quite there, but I was a little bit trigger happy on it. So we battled it again. We battled it the 20-day moving average, and we couldn't regain it. So that's the indicator of what we think is the downtrend, and it's going to, back into the uptrend. Now, as another extra confirmation, we continue to make lower lows here, right? So, we're making higher lows here and higher highs, and now we're making lower lows here. So the trend, you can obviously see when the trend changes. Now, by the looks of it, we've broken out of this sort of line here. Really, a trend line needs three points to confirm that the trend line is valid, but we'll just use this as a bit of a just humor this trend line for a bit. Now Now we've regained the 20-day quite substantially. We have a pretty nice chatty candle, nearly 10% on the day. So we did quite well. So basically, we're looking to hold this level. Yeah, it is probably a little bit parabolic, so I wouldn't mind seeing a little bit of a cooling off period to the upside. Now, what could be the potential downside of this? It's important if you say, maybe you entered it here or entered up here once it gains 20-day, or if you're holding it from a longer term perspective, if you're holding it just basically on a larger time frame, say that's 6 months sort of projection that I had an outlook, what can go wrong, where can we get out. I'm a big believer in keeping your basically your losses small and your profits run, but it's entirely up to you. So I think, again, we got to understand we're sort of trading with the trend. We want to go long. So, we want to trade where the trend's going. So we can say, all right, so we were long here. We didn't enter here because maybe the macro trend wasn't showing that it was a time to sell short. So right here, if we're going long, we basically want to see lower highs here. So, we basically want to see a trajectory like that. Now, if it's going to, in that 60-day cycle, and going back to my 6-month theory, it's got to basically take out this low here. So my stop loss is going to be at 39,000 or so, 39,500. What's $100 between a couple of friends at these prices? So this is the level that I wanted to see it to hold, and especially that 20-day. As you can see, look, I could have been right there. The 20-day is something to battle. It's always something that we test throughout the cycles. You've just got to basically assess your own risk tolerance. So all is well in the space. Where can we sort of go from here, I suppose? If we look at previous cycles, just at a little bit of an example, something I like to use is fib retracement. Let's have a look on this one. Often you can see that going from high to low will give us some not bad price targets. In this sense, we got that 2.68 level. It nearly hit it. It hit it over here. The most common target is that 2.16 level. Let's have a look at a couple other little cycles like this. We went to the 3.618 here. Where else can we look? Let's look at this one. Just for argument's sake. It's okay. It's okay. So on this example, we can look at it like this. On the trend-based fib extension, hit that 2.618 pretty damn well. So what could we look at on this? We use the trend-based from low to high because they're significant levels, right? So we use our cycles analysis to basically show the significant prices, right? because that's a significant low, a significant high, significant low. All right. So I think our first sort of target is probably around that all-time highs mark, and then we're probably looking into making all new time highs. Now, from these prices, what would that be? A 30% gain. So if you had $100, put it in the market now, you could possibly see it going to that level. If we had a bit more of a parabolic rise of 62%, so you would make it. If you had $100, you would make $62 profit. As always, there's always downside risk, and it's something you got to basically accept as as you're putting money into anything. So what could be the downside risk? How could this play out? All right, so what I'm looking at is if we go into Elliott Wave. I'm not a big Elliott Wave fan, but it is pretty popular. A lot of people use it. So Elliott Wave theory consists of 5 waves, and 3 being impulsive waves, 2 being corrective waves. And if you want to read more into that, feel free to. But just going off this rudimentary explanation of it, we see that from a significant low here, I know it doesn't have an arrow on it, but that was the Corona crash, and it's a bit of a black swan event. And again, cycles analysis is a bit subjective. It's what you think happened. So let's just humour this. So we have first impulsive wave, wave 1, the corrective wave 2, wave 3, which is often the most impulsive wave 4, the corrective wave, and wave 5, right? And then, as Elliott wave theory goes, there is a ABC corrective wave after a 5-way sequence. So from here, it's wave 1, wave 2, wave A, wave B, and we'll probably look at a wave C. So it could possibly play out like that. For me, I don't think it would be going into a wave C. I just don't believe in Elliott Wave that much, and I try and stick to my my own methodology of trading cycles. And again, that 6-monthly cycle that I talked about, where we use the 60-day cycle as a bit of an indicator where it could go for the rest of the cycle. So for me, Bitcoin must hold this 39,000 level for that, basically for the uptrend to continue for the next, 120 days, right? And this isn't to go to say that we make a, let's have a look. So let's say 60 days comes out to here, right? This isn't to say we, do a bit of this, come up here, bang, right? Come into that 60 days and then break it down to here, and that could be possibly a thing, outcome. It could go lower. I'm not 100% sure. Only time will tell. I mean, nothing's ever set in stone. Every day in the market is pretty unpredictable, and we're just trying to play the percentages, and we're trying to find patterns that are regularly occur in the market, and basically trade them. And if it works 7 out of 10 times, we've got to pay the expenses of 3 out of 10 times. We're gonna incur a loss, and that's where it comes back to making sure you keep your losses small. So we'll see how it goes. What I would like Bitcoin to do is hold that 20-day moving average and continue to make higher lows. So we'll see what happens. Now, looking at Ethereum, this is a 10% candle, and it's not too bad. Generally, I feel a lot of the alts follow just Bitcoin in general. Their price action is just a little bit different, but the cycles are generally the same. So where can we sort of look at Ethereum? If we look at that, so I dare say, we could probably expect over the next 60 days, if it continues, sort of somewhere between that all-time high and maybe 49,000, the all-time high being 43,000 or 44,000. So somewhere around in that zone, we expect to see probably a little bit of resistance before it marches on, possibly even higher to 6,300. Going down into the ETH Bitcoin chart, we're on now. I think this is more subjective and it's less reliable. Again, a 60-day cycle. You can see that the substantial low probably took out a low there, made a higher low here, and then took that out. So that might have been a middle translated cycle. We made a low here, higher low. Sort of not great. Again, this is sort of subjective. And we made a high, maybe a low here. Again, it's sort of subjective. Now, if you look here, now Ethereum is when the prices are going up, Bitcoin's going down. So again, going back, as cycles traders, we're trying to trade a trend or trying to capture a swing. So as you can see here, this is a low here, made a high, a pretty parabolic high on the RSI 5. It was outside of the Bollinger Bands, looking at the three standard deviation Bollinger Bands, just about hit that third standard deviation. So it's quite a parabolic move, and you can sort of see it bleeding out, and that 10-day has crossed back over the 20-day, and you could probably say it's going to be in downtrend. So if we think, from our left translated, middle translated, and right translated cycles, you can see that this is probably going to be a left translated cycle, right? And from probably the next 20 days, right? So coming out to the 21st of October, we could probably see that Bitcoin will outpace Ethereum before we see Ethereum possibly try and make a move to that upside and really lead the market. So I think the market is just basically waiting to see what Bitcoin does, and we'll go from there basically. So thanks for watching, guys. Hope you enjoy this little market update, and maybe a bit of a trader's look on how we're going. Thanks, guys.